Excuse me. Welcome. I am calling to order Senate Taxes Committee on March 5th, 2026 at 8:32 a.m. Excuse me. A quorum is present. The first item is approval of the minutes. Are there corrections or additions necessary for the minutes? Seeing none, the minutes are approved as presented. The only other item on our agenda today is Senate File 3405. I'm going to make the announcements, however, for next week. There'll be no committee meeting on Tuesday. Wednesday will be a collection of bills from various members, some of them from last year, where people are proposing amendments other than effective dates. And then on Thursday, we will begin hearing bills relating to local sales tax requests. So.
Welcome to the committee, Madam Chair. We're hearing Senate File 3405, and I believe you have an author's amendment.
Yes, I do. Mr. Chairman, the author's amendment is the A3. I move the A3.
Chair Rest introduces the A3 amendment. Please proceed and describe the amendment.
Yeah, it's an author's amendment.
Oh, okay. Those in favor of the A3 author's amendment, say aye. Aye. Opposed, nay. The A3 is adopted. Please proceed.
Thank you very much. Senate File 3405 provides for an extension of the pass-through entity tax election. We usually refer to it as the PTE. And it began as a reaction to the TCJA that was passed in 2018? 19?
17.
17.
Mr. Chair, Senator Russ, 2017.
Anyway, it was a teenager bill, is what happened. So in reaction to that bill, a federal bill which had limited state and local tax deductions for individuals to $10,000, that became an immediate challenge to many taxpayers, particularly those who were owners or partners or shareholders in terms of their business formation. And so the states were looking for ways to get around that, quite frankly. And the result that then was acknowledged as lawful was to allow those entities, such as partnerships and S corporations and limited liability companies, how, depending on how they're organized, to pay whatever taxes were due. And I'm going to just refer to partnerships, to partner, by the partners in the partnership to be paid at the entity level. And so that brought a lot of relief to those business entities. And in Minnesota, we have found out that there are some 65 businesses that are organized in that manner. Recently, that provision expired because of the imposition now, or allowing, however you want to refer to it, of that SALT deduction being increased to $40,000. However, the pass-through entity provision expired at the end of 2025, which means that we're back under the old law for those state businesses. And that means, because really, they need to start paying their estimated taxes for the first quarter on March 15th. So it is a, even if later they would not owe that amount, nevertheless, they have to pay it now, and that money is gone, and they need, and any refund that they would get would come next year. So March 15th is a pretty crucial date because they need to pay it. And even though it may also be refunded, even if we act later, as I understand it. So what this bill does is to, with the amendment on it, allow the pass-through entities to continue to operate with regard to their tax liability and paying their taxes until 2029. The whole provision also then expires in 2030. The House, when the House took up this bill, Representative Davids, they had an extension until 2027. And that's fine, except if they wanted to extend it again until the year in which the whole provision goes away, that means they'll have to do another extension in next year's tax bill. And it seemed to me that we should at least move forward through 2029 and give the tax committee and the legislature another crack at it, so that there's not that sense of urgency that might otherwise be felt in both 27 and 28. So it's 2027 excuses it now, but it seems to me we should do it through 2029. So people ask what's the revenue impact of that change, and in essence, the revenue impact is zero. And the revenue estimate, the updated revenue estimate, indicates that it's zeros across for the next 4 years, and there are no parentheses. The revenue estimate, the older revenue estimate, said that it was unknown, but because it had parentheses around it and the description of it was clearly that it was going to be a benefit to individual income taxpayers, although the amount of money would be owed to the state would be the same. And so by extending it, we acknowledge a general, but still unknown, impact for Minnesota individual taxpayers, but the state loses no money. And so that seems to me to be an excellent way to acknowledge these businesses that choose to organize in those ways. And in 2024, if you look at the revenue estimate, those PTE tax credits were claimed on 66,300 returns, including 65,600 M1 returns. The narrative on the back is much simpler this year. The net effect from the Department of Revenue will generally be net revenue neutral, and it is assumed that by this extension, and these are their words, that it will not affect total Minnesota tax liability, and the tax year impacts, as generally understood, are allocated to the following fiscal year. Mr. Chairman, that is the bill and explanation, and I believe that there are a number of people that want to explain why this is so important to them in their business lives and the impact it would have on their own tax liability.
Thank you, Chair Rest. We do have a number of testifiers on the legislation. So first up is Brian Cook. Welcome to the committee. Mr. Cook, if you could introduce yourself for the record and go ahead with your testimony.
Good morning, Vice Chair Housechild, members of the Senate Taxes Committee. My name is Brian Cook. I'm the Director of Tax, Fiscal Policy, and Elections for the Minnesota Chamber of Commerce. Chamber represents more than 6,300 businesses of all sizes in all corners of the state with more than 500,000 employees. Appreciate the opportunity to share our support for Chair Rest Senate File 3405, which would revive the state's pass-through entity or PTE tax. We also really appreciate the A3 amendment, which was adopted and gives businesses a little bit more runway before we need to have this conversation again in this committee. Of the Chamber's 6,300 members, the vast majority of them are small and medium-sized businesses. Many of them operate as pass-through entities paying their business income taxes through their individual income tax return. The PTE tax helps mitigate the impacts of the federal SALT deduction cap, first instituted as part of the Tax Cuts and Jobs Act in 2017. Minnesota passed our PTE tax in 2021 as soon as the IRS approved of the concept in late 2020. The Chamber supported the PTE tax when it was enacted in 2021, and the win-win-win that we predicted then has been the case in reality. The PTE tax lowers federal tax burdens, causes no revenue loss to the state, and helps maintain our competitiveness. Over 30 states have a PTE tax. That's in addition to the states that do not tax personal income, and not reviving it would place us at a competitive disadvantages to the states that currently have one. The impact this would have is significant. Based off of the data from the Department of Revenue in the revenue analysis, over 66,000 pass-through entities have utilized the PTE tax. That's up from about 20,000 that utilized it in 2021. So although we've been monitoring this issue since the passage of H.R. 1 last summer, which increased the SALT cap to $40,000, many businesses did not realize the PTE tax had expired until the Department of Revenue notified taxpayers in late November. As a result, businesses are facing uncertainty at a critical time. First quarter estimated tax payments are due soon, and the lack of clarity around what the legislature will do is creating real concern throughout the Minnesota business community. So we're urging the legislature to move quickly and reinstate the PTE tax so businesses have certainty before those deadlines. Thanks again to Chair Rest for her continued leadership on this issue. Thank you to the members of the committee for your consideration of the bill.
Thank you, Mr. Cook. Any questions for the testifier? All right, seeing none, we'll move on to the next testifier, Mr. Joel Carlson. Welcome, Mr. Carlson. If you could introduce yourself for the record and proceed with your testimony.
Thank you, Mr. Chair and members. My name's Joel Carlson. I own a legal research and government affairs business here in St. Paul, and I'm here on behalf of the Minnesota Association for Justice. Our association is a professional association of attorneys and law firms across the state that range from Roseau to Albert Lee. Many of them, I won't say all, but many of them are practicing as S corporations or partnerships. And this is a critical issue for small and medium-sized law firms across the state. And so we are here to urge you to adopt this very thoughtful policy to address the $10,000 limitation on state and local tax deductions. And I think it was a very elegant workaround, and we hope that you can move this bill forward. I'm cheering for a tax bill in 2026. And happy to answer any questions, but just add our voice to this. This affects businesses of all types across the state of Minnesota, and we appreciate your thoughtful consideration of it. Thank you, Mr. Chair. Happy to answer questions.
Thank you, Mr. Carlson. Any questions for the testifier? Seeing none, we'll move to the next testifier, Mr. Chris Martin. If you could come up and introduce yourself for the record and proceed with your testimony. Thanks for being here.
Mr. Vice Chair, members of the Senate Taxes Committee, thank you for the opportunity to testify. My name is Chris Martin. I'm a tax director with the accounting firm Eide Bailey, a member firm of the Minnesota Society of CPAs. We serve a number of clients in Minnesota and across the country, including partnerships and S-corps, which have made these state PTE elections in the 35-plus states that have them. I am here testifying in support of Senate File 3405. We appreciate Senator Rest bringing this forward. With the extension of the federal SALT cap this summer, businesses now have assurance that the limitation on the SALT deduction, although raised to $40,000, will still stay in place through 2029. This also means that state PTE elections will remain in place as well. Pass-through businesses that make state PTE elections often pay more state taxes due to paying at the highest state tax rate and foregoing certain deductions. While the revenue estimate is shown as neutral, I do know many taxpayers end up paying more Minnesota tax under the PTE election in order to take advantage of the federal benefit. Over the last few months, I've received numerous calls and questions from our Eide Bailey offices and clients, not only in Minnesota but across the country, about when and if Minnesota will extend its PTE election. Many are surprised that it expired in 2025 and that it hasn't been extended already. It's not some obscure tax provision. It's definitely at the top of mind of many business owners, regardless of industry, manufacturers, service providers, egg companies, retailers, all benefit from this election. They often ask me why the legislature wouldn't extend the PTE election, and I've yet to come up with a good reason. In the months after passage of the federal OB3, states have raced to extend the PTE elections, with Oregon and Minnesota among only the few remaining that have not. Knowing how to file and pay extensions by March 15th and Q1 estimates, it's crucial for our small and medium-sized businesses for cash flow purposes and to project what their federal and state tax liabilities will be. Passing this bill quickly will certainly give them clarity and help them financially putting more dollars back in their business to invest in their businesses and communities. Thank you for the time. Happy to help with any questions.
Thank you so much, Mr. Martin. Any questions for the testifier? All right. Thank you so much for being here.
Sure.
Up next, Mr. Connor Stinson. If you could come up and introduce yourself for the record and proceed with your testimony. Thanks for being here.
Thank you, Mr. Chair, members of the Senate Committee. Thank you for the opportunity to speak with you today. My name is Connor Stinson. I am a CPA and tax manager at CBIZ, where I work closely with Minnesota business owners and their pass-through entities on planning, compliance, and overall tax strategy. I'm here today in strong support of SF 3405. This bill provides needed stability for thousands of Minnesota small businesses by continuing the current pass-through entity framework that many owners have come to rely on as part of their annual tax filing. SF 3405 ensures that qualifying entities can continue using this election going forward rather than facing uncertainty about whether it will remain available. For our clients, that stability makes a real difference. When businesses can depend on consistent tax rules, they're able to plan ahead with confidence, budgeting for payroll, investing in new equipment, and hiring new team members without worrying about sudden changes in their tax position. Predictability helps them make better financial decisions, which ultimately strengthens the communities they operate in. SF 3405 also keeps Minnesota competitive. Many of our clients operating in multiple states are having a clear, steady framework here at home helps them stay aligned with other states that have already committed to similar long-term approaches. That consistency reduces administrative frustration, lowers compliance costs, and sends a message that Minnesota is committed to supporting the business community. And importantly, this bill supports everyday Minnesotans. When small businesses have clarity around their tax obligations, they are in a stronger position to raise wages, expand benefits, and reinvest in their people. That means stronger local economies and more opportunities for working families. Chair, members of the committee, the SF 3405 is a thoughtful, practical step that provides stability where it's needed most. It supports taxpayers, strengthens our business environments, and promotes long-term economic health for the state. For this reason, I respectfully urge your support. Thank you for the time.
Thank you, Mr. Stinson. Any questions for him? All right, seeing none, thanks so much for being here. If you'll stay back just in case there are questions after we're done with all the testifiers. Up next, we have Mr. Brian Rice. Welcome to the committee. If you could introduce yourself for the record and proceed with your testimony.
Thank you, Mr. Chair. My name is Brian Rice. I'm an attorney in Minneapolis with the law firm of Rice, Walther, and Mosley, LLP, Limited Liability Partnership. I am a lobbyist. I'm here today, though, speaking solely on behalf of myself. I'm also here to exercise my First Amendment right to petition the government to redress a grievance. And my grievance is this legislature should extend the PTE. And I'll talk about that in a moment. And my petition is you pass Senator Rest's bill. I'm a Democrat. I've practiced law for 44 years now. I believe in progressive tax system. I get really excited when you come out with your tax incident study because it talks about the structure of the government in this state, and really this tax committee funds everything that happens in this state in one way or another. So the decisions you make in this room really create the operation. You can't do it without taxes. And how you design that tax system is really, really critical. I've been in this room with a lot of tax chairs, Senator Johnson, Senator Pogemiller, Tom Bach, Senator Bach, Senator Rest when she was on the House side and now on the Senate side, D. Long, Paul Ogren, just a lot of big thinkers about how you run the state. And we have a great tax system. And one thing I learned as a young person from Governor Perpich was when I pay state taxes, the federal government is paying 40% of it. It's one of the best deals we get because we are a higher tax state. And members of this committee, the big thinkers of it, Minnesota contributes, according to my research, over $111 billion in taxes to the federal government. $111 billion. That's twice what we have in the whole state spending on property taxes and income. What do we get back? $75 billion. We're a net contributor to the federal government of $36 billion a year. Coincidentally, the most recent tax estimate that you got in the budget, we pay $36 billion in income taxes. Why is this important? In the 2017 Tax Cuts and Job Act, this provision on state and local limitations was specifically aimed at states like Minnesota that were high income tax states. They needed to balance their budget. Congress decided to take it out of the hide of states like Minnesota in order to pay for their other provisions. It was a dagger aimed at the heart of this room to disincentivize income taxes or other measures. New Jersey, New York, Illinois, California, and it created a lot of issues. But that was designed to be punitive, even though this state is already contributing way more to the federal government than we're getting back. So the one kind of good benefit that was being taken away. And so there was this issue, and listen, I'm just a simple lawyer from North Minneapolis. But in 2021, there was a tax chair on the other side, Representative Marquardt, who got onto this idea of the PTE and the workaround, and it was adopted, and all of a sudden, the playing field got leveled a bit. And some of the ability to take that deduction was back in there. And there's a lot of principles behind this notion of why we should have that. One is there's a double taxation element. If you're paying state taxes and you're also paying federal taxes, you're kind of paying a tax twice on your income. And that's one theory. The other theory was fiscal federalism. The federal government should respect the state. The states make decisions about how they want to spend money. The federal government makes its decision. And there should be this respect between the sovereignty of the states and the sovereignty of the federal government. That actually led to a court case, New York versus Yellen, where the states were arguing, wait a minute, it's unconstitutional to impose this SALT limitation. The case didn't prevail, but the principle is a good one in theory. And there's also this notion that by having this exemption, it gives some ability to the states to spend money. You know, earlier in my career, I was a municipal bond approving lawyer for the first part of my career, and you've always heard about the exemption for interest on state and local taxes, that you don't have to count that on your income tax, which also encourages spending on your bonding bill and on other matters. And thankfully, they didn't take that away, but they could under these theories. And I'll try to get to my point. So why am I here? About a week ago, my accountant, Mike Deegan, tells me this PTE expired, and I go, what? News to me. And then I talked to Senator Rest and found out there was a bill, and I said, oh my God, what's going on? And I have to say, I appreciate the fiscal note of DOER, or the Department of Revenue, but you know what? I came in here looking, there should be a fiscal note here from the United States Department of Treasury. And you know why? Because there kind of is one. If you look in your packet, there's a letter from Clifton Larson Allen. It's a really big accounting firm. It's national based, but it's located here. They do taxes all around the country. It's a very sophisticated firm. But if you look at the very bottom in the right corner, you'll see the number 400, the dollar number 400. But flip it over. The next word is million. You know what that number is? It's 400 million by removing this PTE exemption. That's going to be money taken out of this state and sent to Washington, D.C. That is the fiscal note. I appreciate what DOER is doing here, but the citizens of this state need a fiscal note. You need to stop this steal. Washington is stealing $400 million from this state in its income. Our taxpayers will pay $400 million more, according to DOER's, CLA, Clifton Larson Allen. says they've got this number from talking to the Department of Revenue. That's 400 million that's going to be taken. It is being taken right now, right this instant, because you did not renew the PTE exemption in the last tax bill. It's expired, it's gone. We're 2 months into the year. You're literally losing by April, end of this month, you're going to lose 100 of that $400 million. Taxpayers here are going to pay it to Washington. We're already losing. We're already given 111 billion, and we're getting back 75 billion. So, and this is free. And I would even argue the last testifier, I think Mr. Martin said, you're making money in the PTE. We have to pay at the full rate, 9.85% every quarter throughout the year. When you do it personally, okay, here's my estimate, I pay it on April 15th, I'll do it, but if I don't have all the money, I might short it, hoping I'll make it up later in the year. It'll be an estimate. No, this is a hard number. When this provision got put in, all of a sudden the revenue from the state really bumped up. It did a lot better than it thought. It flattened out your revenue throughout the whole year. All these businesses had to pony up the money. You pay at the 9.85% to get the break. But I will say, Senator Rest, we hear headlines about money going out the door and fraud and the other stuff. This is $400 million. I'm surprised there hasn't been a headline yet, because that's what's going on. The money's coming out, and it's too bad the Treasury Department wouldn't come in, because they would like this. They would be opposed to this, because don't pass it this year, and you've just given the federal government another $400 million of money from Minnesotans. The only other thing I could say is that we've heard other testimony. 41 states in the country have income taxes. 36 states have passed this PTE workaround. And for the life of me, I testified in the House earlier, I really don't understand why this is even an issue. This is about as no-brainer a position, I think, as you'll find anywhere. I mean, there's these arguments that, okay, it does now, the extension will advantage people that the cap went up. Oh, the other one, I do have one suggestion, Senator Rest. The cap goes back to $10,000 in 2030. And guess what? I doubt the fiscal integrity of the federal government is going to be any better in 2030 than it is now. And I would submit it's going to be much worse. And so when they project their deficits, they're building in the fact they don't have to come up with this $40,000 SALT cap or not. So it's going to be even harder to deal with this. And if you don't deal with this now, and if last year, I don't know what happened, somehow it slipped, it didn't happen, maybe people didn't understand, I'll have to defer to the senator on it, but this should really be made beyond that 2030, because the SALT cap will be lowered. There'll be more money extracted from this state than should be, and the idea that we come in here and talk about the tax incident study and what a great state we have and how well it's financed will be even more in peril. So thank you, Senator Rest. That's my petition and my grievance, and members of the tax committee, thank you for indulging me this morning.
Thank you, Mr. Rice. Any questions for the testifier? Madam Chair.
Mr. Chairman, in my explanation, I indicated that the first date for estimated taxes was March 15th, but I believe the estimated taxes are based on the individual system, and it is April 15th. So I was mistaken that corporations have to do it by, C-corps have to do it by March 15th.
Thanks for that clarification.
Mr. Chairman, I would move that Senate File 34.
No, Madam, sorry, if I could interrupt, we do have two additional testifiers.
Oh, I'm sorry, I thought we were
Yep,
finished.
no problem. So next, we have Mr. Jonathan Bosch. Not sure if I'm pronouncing that right, but if you'll introduce yourself for the record and proceed with your testimony. Thanks for being here.
Thank you. Good morning, Vice Chair Housechild and members of the committee. For the record, my name is John Beshy, and I am the State Director for the National Federation of Independent Business in Minnesota. Thank you for the opportunity to provide some comments in support of Senate File 3405. NFIB represents over 10,000 small and independently owned businesses throughout Minnesota, and our mission is to promote and protect the rights of our members to own, operate, and grow their businesses. NFIB supports Chair Rest Senate File 3405, which restores and expands the option for Minnesota small businesses to utilize Minnesota's pass-through entity tax election. In Minnesota, most small businesses are structured as pass-through entities in which their business income flows directly to the owner, who reports and pays state income tax at the individual level. By restoring and preserving the option for small businesses to utilize the PTE election, the legislature will ensure that Main Street businesses throughout the state can continue to maximize their federal deduction opportunities and reduce their federal tax liabilities. Any reduction in their overall federal tax liability has a real and direct impact on cash flow for these small businesses, and these potential tax savings are not insignificant. They can influence decisions regarding hiring and compensation, capital investment, and business expansion. As previously noted, this bill will also provide small businesses with greater certainty as they estimate their tax liabilities and plan for the remainder of the year. And I just want to add, we do also appreciate the extension to 2029 and Chair Rest's amendment that was adopted. It's also been noted, but I'd like to further emphasize that the revenue note indicates that there's no fiscal impact to the state, which should make it an even more attractive option for the legislature to consider. Absent any action, small businesses that utilize this option will potentially face increased federal tax liability, which will hamper their ability to grow their businesses and to serve their local communities. By restoring and expanding this election, the legislature will be providing small business owners with greater certainty and revenue-neutral tax relief to small business owners who will be able to reinvest these dollars into their businesses and communities. Thank you again for the opportunity to provide comments. We respectfully ask the committee to support Senate File 3405 and preserve this option for Minnesota's small businesses. Thank you.
Thank you, Mr. Beshy. Any questions for the testifier? Seeing none, we will move to Ms. Roz Peterson. If you could introduce yourself for the record and proceed with your testimony. Thanks for being here.
Good morning. Thank you for the opportunity to testify in front of you. Good morning, Chair and Senate members, and of course, wonderful Senator Rust. My name is Roz Peterson. I'm the Public Policy Director for NAIOP, and that is the Commercial Real Estate Development Association, and I'm part of the Minnesota chapter. Senate File 3405 simply extends a provision that has been successfully in place for several years and continues to provide meaningful support to small business owners and real estate investors across Minnesota. This policy addresses an inequity created when the federal government imposed a cap on the state and local tax or SALT deduction. Before the expiration at the end of 2025, pass-through entity payers like LLCs could pay their estimated tax before December 31st, allowing the deduction to be recognized in the same year the expense was incurred. This aligns tax treatment more closely with actual business activity and restores fairness in the federal tax code. Importantly, this provision has no fiscal cost to the state of Minnesota. However, if not adopted, many small business owners will see a significant increase in federal taxes simply because we live in a high-tax state. And for that reason, may I suggest that this provision does not expire? Because as we've heard from previous testimony already, this is not going to go away. So as noted in the letter that's in your packet, these property owners already pay higher property tax rates on top of the state business general levy, which can increase overall property tax burden by roughly 25% or more. At a time when operating costs and budgets are tight, extending this provision provides tax fairness without reducing tax revenue to the state. This is a bipartisan and bicameral policy that has worked well, and we respectfully urge your support for Senate File 3405 and the extension of this important law. And thank you again for the opportunity to testify.
Thank you, Ms. Peterson. Any questions for the testifier? Thanks so much. So we will move to discussion unless, Madam Chair, you had maybe something to add?
Mr. Chairman, just if any member has a question for me.
Wonderful. Senator Weber?
Thank you, Mr. Chair. Just thinking about the testimony we've heard this morning, Madam Chair, did you give any thought to about just allowing the pass-through exemption and not putting any sunset on it?
Yes, but it seems to me that the uncertainty of what's going to happen when it expires at 2030, there should be opportunity there for the legislature and the Congress, for that matter, to make that policy before we would then move to conform to something that maybe we would find beneficial to Minnesota. So I'm just putting them together, I think, making sure that as long as, or until that provision expires, period, in 2030, that we don't have something on the books conforming to something that will no longer exist. Does that make any sense or not?
Thank you, Mr. Chair. Well, I think it does, but at the same time, if we had it on the books, I don't know, would there be a negative effect for having it there?
Mr. Chairman, Senator Weber, I really don't know.
Okay.
I might be dead by then, so I haven't thought that far ahead.
All right, very good, thank you.
Senator Nelson.
Thank you, Mr. Chair. Thank you, Mr. Chair. Senator Rust, thank you for bringing this bill and for the excellent testimony. This was a central piece of the 2021 tax bill. And I am, on the one hand, I'm kind of disappointed that we have to redo it again, which gets maybe to Senator Weber's point a bit. But what I would say is that this is essential. And I also appreciated Mr. Rice's testimony about perhaps why the pass-through entity tax is so needed. And I would just note that when we passed this in 2021, it was very bipartisan. I thank my chair over in the House, the tax chair over in the House, who was also obviously very supportive. And I'm hopeful, Madam Chair, that as we move forward today, that once again, this will be very bipartisanly supported. It is best for Minnesotans. And it is so imperative, Madam Chair, that that we get a strong support from this body right here, that I am going to ask for a roll call, Madam Chair.
Sure.
Roll call requested, roll call granted. Chair Rust, any comment?
Mr. Chairman, and thank you, Senator Weber and Senator Nelson, for your comments. Mr. Chairman, I move that Senate File 3405 as amended be recommended to pass.
Chair Rust moves that the Senate File 3405 as amended be recommended to pass to the floor.
With that motion, you don't need to add those words.
Okay,
If you
great.
don't refer it to another committee,
Got it.
it goes automatically to the
See,
floor.
learning on the job, love it.
Hey.
Thank you, Madam Chair. Clerk will take the roll. Thank you.
Senator Rust,
Yes.
Senator Hauschild,
Yes.
Senator Weber,
Yes.
Senator Dibble,
Yes.
Senator Drazkowski,
Aye.
Senator Henningsen Yeager,
Yes.
Senator Miller,
Aye.
Senator Nelson,
Yes.
and Senator Putnam.
Yes. 9 ayes, 0 nays. The bill passes.
Mr. Chairman, I already announced what the schedule is generally for next week, and so on that note, you may adjourn the committee.
Committee is adjourned. Thanks, everybody.